My inbox is usually flooded with a lot of questions, and over a while, I have got too many messages asking me if trading is gambling. So, recently I did an Instagram poll to see how many people do really think that trading is gambling. And here are the results of that post. Over 21% of people think that trading is gambling. And in this video, I'm gonna give you my opinion on that. So let's get started. My answer to it will be a yes and a no. And let me explain this to you. I said a yes and a no because I think it depends upon person to person. For a person who risks recklessly, trading will be a gamble. And for a person who uses proper risk management and proper trading plan, trading would be just like any other business. To understand this, let us first try to understand the difference between a trader and a gambler, and then let's see if trading is really gambling or not. Also, at the end, I'm going to share an amazing technique that will help you know if you are trading or you are gambling. So make sure you watch this video till the end. So, who is a gambler? A gambler is a person that puts money or anything of value at stake on an event that has an uncertain outcome. The gambler hopes to win something out of this activity by taking a chance on that event, and it is mostly based on luck and skill. In gambling, there is always some sort of risk that is involved, and whenever a gambler puts his money or any other valuable item at stake, he is taking a risk. And while he takes this risk, he hopes to win something in return that will make his activity of taking a risk and betting on an outcome worthwhile. Gambling activities involve betting on the roll of a dice or a roulette wheel, or in games like poker or blackjack, or betting on the results or outcomes of matches played in the various sports or even in the lottery. This is not an exhaustive list of gambling activities. Everything can be gambled upon. This is the basic essence of gambling. Hence, in gambling, there is a stake, that is money or anything else put on the line. There is risk, that is uncertainty over the outcome of the event, and then there is a prize that the gambler will win if he predicted the outcome of the event right. Now, let us learn who is a trader. In the most general sense, a trader is a person that buys and sells goods with the hope of making a profit in this process. In today's time, almost every person has traded something or the other at some point in life. From the person who sells milk to the person who sells gold. Everyone in today's time is selling or buying something, hence trading. In the financial sense, a trader is a person that buys and sells a financial product or an asset on the financial market. They could engage in this activity for themselves or on behalf of the institution. The activity of trading is driven by profits. A trader will acquire stocks, commodities, derivatives, currencies, bonds, etc., and then trade it in return for a profit. In trading, there is always a risk involved, and for every risk taken, the trader will hope to earn a profit. Hence, in trading too, there is money put on the line. That is, for acquiring the financial asset, the risk is involved as the price of the asset can increase or decrease, and a price is involved wherein if the trader correctly forecasted the price movement, he stands to earn a profit on that trade. Now, we have seen what gambling and trading are, and we have seen that both involved stake, risk, and a price. But does this make trading and gambling the same? No, there is a difference between the two with respect to the approach a gambler takes towards the gambling and the trader takes towards trading. The sole thing that differentiates gambling and trading is the why factor. Why does the trader think that the price of the asset will increase or decrease? If the trader does not have an answer to this question, then it is plain gambling, as there is no rationale behind the trade and the outcome is based on luck or chance. But If the trader has a genuine rationale for the trade and knows why the price of the asset will experience a change, then it is something we call organized speculation. It is a commonly known fact that every game that is present and functioning inside a casino has its odd title towards the casino or the house. The casino runs these games with odds in their favor, and in the short term they will lose money, but in the long term their odds will play out and they will be profitable. This is another difference between a pure gambler and a trader that is involved in organized speculation. A gambler thinks that the odds of him winning or losing is 50-50, but in reality all games are not built with two outcomes with equal odds. Hence, the odds are stacked against the gambler, and in the short term he may win and earn money, but if spread over the long term, the gambler will lose the money. A trader that indulges in organized speculation knows about the odds that are in his favor in the trades he takes. And these types of traders will have a proper rationale behind the trade, which is based on some sort of analysis that they perform before committing to the trade. Such traders does have a trading plan in place which gives them the why of the trade. The traders with sound trading plans knows beforehand as well as at which price level they must exit the position in order to limit their loss in case the price moves against them. There is always a why involved in trading which the gambling lacks. And if you are a trader and don't have the why of trading, then you too are gambling. Over 90% of traders in the forex industry are not even aware of this thing. This shift from trading to gambling is natural, and it is of utmost importance to know when you are gambling and when you are trading, so that you can avoid that transition from trading to gambling and always be on the track. So the question is, what causes an individual to shift from trading to gambling? Well, there are multiple reasons to it, and the most common reason is improper risk management, unrealistic expectations, and the emotions. The emotions and the risk management most of the time go hand in hand. Improper risk management is the result of overwhelming emotions, and sometimes the overwhelming emotions are due to reckless risk management. Like, imagine a trader got into a setup which he has traded in the past and won a good amount with it. This time when he gets the same setup, he will be much overconfident and try to risk double or even triple than he previously did, and that too in order to get higher profit. So here emotions made him risk higher than he should have. Now imagine he loses that trade. Now what will happen is the emotions will be out of control and the trader will try to recover the previous loss again by risking higher. This time the emotions are making him risk higher than he should have. These few sequences of events are common with almost every other trader, and only a few know how to deal with them and not move towards gambling. There is another common reason why traders shift to gambling. The traders open trade on hope and assumption and not on what is happening in the market or on the why factor. They use any particular strategy and they think that they have mastered trading. And here is where they mess up. You are again gambling if you just rely on the strategy. The fact is, the strategy is just there to help you with your entry and exit points. But to really pull the odds in your favor, you will need the why. Now, I cannot tell you about what your why will be, as it can differ from different trading styles to different trading styles and also with the strategies. But always remember, finding the why will help you shift from a gambler to a professional trader and will help you deal with your bad trading habits. So every time you enter a trade, you should ask yourself a simple question. Why are you entering that particular trade? And only after answering this question, get into a trade. I have talked about this in detail in my book, The Art of Forex, which is going to launch very soon, and you can check it out on my website forexmonopoly.com. Now, the reason asking this question to yourself helps is most of the time our mind is flooded with the emotions that are caused by the outcome of the previous trade, and we are not totally aware while getting into a new trade. We don't think with a clear mind and we let a lot of emotions affect our decision. But doing this small thing will help you tap into the awareness mode and help you stay on the path of trading and avoid gambling. I hope you liked this video. If you did, make sure you hit that like button and share this video with someone who is not aware if trading is gambling or not. And also, do not forget to subscribe to this channel for all the forex related content. I am Daksh. This is Forex Monopoly. Thank you so much for watching.